Welcome to the latest sales and rents report from the Crockers Property Investment Index survey series conducted by Ipsos New Zealand. This data from July 2017. Right, well, when we start looking at the Real Estate Institute of New Zealand's figures for Auckland residential property sales, we see that there has actually been quite a substantial increase in sales over the April to May period, and this is pretty much in line with the normal seasonal increase we see in these months from year to year. However, we do see that the number of sales overall is significantly lower than in previous months. So while there has been a normal uptick, we're still at a much lower level than in previous years. And when you take into account the increased housing stock, we can see that proportionately the amount of sales has gone down even further. Despite this increase in sales activity, the actual prices, the median sales price, has gone down. That's for the second month in a row. Not gone down a lot, but given the recent patterns for the Auckland housing prices over the last few years, any decrease is certainly noticeable. So if we're seeing the prices going down and sales going up, seems to be there'll be a few buyers rallying to make the most of a declining market, and perhaps some more sellers trying to beat the impending decline in values and possibly also the looming increases in mortgage rates. So a bit of a seller's market if they're trying to beat decreasing sales, and then we can certainly see there's a few more people out there buying than in the last few months. In terms of the rental scene, we actually see that the Auckland situation is a bit more healthy, with an increase in two-bedroom rental prices over the last month or so, up to $481 now for a two-bedroom property, and that increases against a complete lack of increase or decrease in New Zealand overall. So the Auckland rental property market going up and the rest of the country standing still. And we actually see the same thing applies in the three-bedroom market as well, with rental property prices going up in Auckland and actually stable to down around the rest of the country. So at least that's good news for investors, that you're actually being able to charge a bit extra and certainly charge a premium on Auckland rental properties than compared to rental properties elsewhere in the market. So when we asked people about how they actually expected their rental property investments to perform over the next 12 months, there has certainly been a decrease in those thinking things will get better, a slight increase in things getting worse. So yes, you'd see there a bit of a increase in pessimism there, but overall we still see most people thinking things are going to remain pretty much the same. So yes, an increase in overall pessimism, and you can see that in the following chart when we actually look at the impended changes, because we're seeing that the number of people expected to make no change is going up. People planning on increasing their investments has gone down. So yes, definitely a recipe for rental property investors to hang tight. No big changes either way. Overall, though, if you're feeling a little more abundant, then you can see here that that's reflected in the Rental Property Performance Index, where we see here that the expected returns over the next 12 months has definitely gone down, while the planned investments is pretty much stable. So despite the decreases in expected performance, it's not like there are a whole lot of people bailing out all of a hurry there, just sitting tight and knowing that the prices for properties should not go into free fall given the current demand, particularly in rental properties that we're seeing. Now, also in the news recently was a sizable increase in central Auckland apartment investments. A lot more apartments being built and coming on stream and being consented, particularly when you look at the lack of new builds in recent years. And so that seems to be noticed by our investors, who's certainly looking at that increased availability of central CBD apartments and planning to invest accordingly. So we certainly see the market picking up there. Definitely a demand for those CBD apartments that are currently being built or recently consented. The flip side being, of course, that it means that apartments elsewhere are a little less attractive, while there are those CBD ones going on there. And likewise, the same with other residential properties, as we saw before, that most people tending to sit tight and make no change. Commercial properties at their highest level of interest for several months, generally a nice ongoing climb up there, perhaps with investors seeing the commercial property investments being a little more stable than the ups and downs of residential. If you have any more questions about this, then by all means contact Crockers or Ipsos.